All right, I just did an entire stream analysis and then realized that I'd never pressed start the stream, so this was never streamed and never recorded. So I'm going to do this again, and I'm going to do it quickly. All right, monthly time frame. We pointed out that we have a monthly bullish inversion for value gap. So this sell side imbalance, buy side inefficiency, also known as a bearish for value gap, was inverted once we closed over it back in February 2024. And we have since come down into this BISI multiple times, but the body's never really closed inside this BISI. And just now in August, we've retested the inversion for value gap, the bullish monthly, respecting it. If we look at the leg, this dealing range from this swing low or intermediate term low, these up till here, we have not even really touched, or I guess depends where, yeah, we haven't even touched the midpoint, consequent encroachment. So to think that we could retrace back to 62% before going higher, that, you know, that's very likely. That would put us at 43,253 approximately. If we go even lower, that would put us at 38,800 into the middle of the usual optimal trade entry dealing range. So are we likely to see that Bitcoin retraces back down to the 38 to 43 range? Certainly possible. And it becomes a little clearer as to why as we go to the lower time frame. So the weekly, I'd pointed out numerous times in these analyses that the last time that we saw a bearish market structure shift where the weekly candle closed below these swing lows was back in November 2022. Since then, it's largely been bullish price delivery until this candle, this weekly candle, the 1st of July 2024, where we closed below this swing low. Okay, now I know that ICT says that I've heard him say this, although I don't fully understand it. So I mean, I have to see it more times to gain more experience. But he says he doesn't actually have to close below the swing low for it to be a market structure shift. But it just seems more credible to me. So I'll have to just continue studying that for myself. So we had this displacement lower, this leg coming down lower, with weekly SIBI over here, and that was really it. Then we moved up and we had a BISI over here pushing up, but we never quite made it above the open of this the candle starting this move downwards. We did not close above there. And now we have a strong push downwards 2 weeks ago, and the question is what's going to happen next. Let's go down to the daily candle. So on the daily, we had this whole move downwards, culminating in the bearish market structure shift on the weekly candle as well as on the daily. But the daily, we had that, of course, all the way up here. Weekly is much more significant. Then we curled around, came back up. We had a bullish inversion, which is not marked off here, pushing, which we moved upwards, and so on and so forth. We then had a bearish market structure shift on the daily candle, where we closed below this BISI, forming a bearish inversion for value gap after having one up over there. There's another one further down. And interestingly enough, we've respected that. We've respected that quite well. So we haven't gone higher. We've respected this bearish inversion for value gap. If we mark off this dealing range, let's just say over here, actually, let's invert that. No, wait a second. What am I doing here? I want to mark off this one. I got that backwards. Okay, now it's backwards. I mean, I got the wrong. I'll get it right, and then I'll start talking again. Okay, so this dealing range, including the bodies. So we've come above 50%. Although, again, he uses the wicks when looking for midpoint, but we've barely come up to 62%, and that's okay as I understand it. Sometimes you fall just short of that, but price came up to there, respected this bearish inversion right below it, continued lower. So what happens next? let's, it should be interesting to see. And this, what is this? Okay, that must be there from something lower. I'll have to put it back. Taking off this, the OTE measurements. Let's go down to the 4 hour, which is really interesting. And these are just marking off purchases I've made. And I purchased here after we had a strong move down where we went into this BISI, this buy side imbalance, sell side efficiency, or bullish for value gap, and we respected it quite nicely. And I figure we're going back up. I don't know if we're going to continue higher or not, but that's a good sign to buy some more. So on the 4 hour, we had this displacement lower down into the monthly bullish for value gap and the monthly inversion for value gap. We came here, we inverted this entire SIBI when we closed above it over here, and continued up higher. But it's important, as I pointed out, I believe on the daily time frame, we never closed above this leg lower. Oh, sorry. Well, we did close above on the 4 hour. But we respected the SIBI, we respected the daily bearish inversion for value gap, never quite making it up to the higher one over there. And we came down. So we had this bullish displacement all the way here. And what we want to see if we're going to go higher is that we come back, we retrace, ideally to optimal trade entry, which would be much lower, about 62% or more to 79% of the way down. So that would put us maybe roughly around here. But it doesn't have to be. So we could come down and then have a bullish displacement on the other side of the V. But we don't have that. There's no BISI, no bullish for value gap here. But we do have a couple of bearish ones over here. We have a small one between those two candles over there. And then we have a slightly bigger one over there and another one over here. So we have, in this leg, we have bearish displacement. But when we came back up, we do not have any bullish displacement. Continued chopping sideways, not much motion or movement there at all. Until we get to here, where we do have a small BISI over here and another one we had over here. But again, we'd want to see that we're going to come back with come back in a retracement and then bullish displacement in order for us to trust to move higher. But instead, what we have here is that we have no, we came into the inversion slightly, and then we moved away, but we really respected it, hardly closing in it at all. No bodies here except for a little bit over there. And then we've had a high and a lower high and a lower high until this high came up, sweeping some liquidity away from buy side over here before displacing lower. And in another hour and 25 minutes, we will see where this candle closes. If this candle closes out that small BISI, as well as the BISI over here, now we have a 4 hour bearish inversion for value gap to give us signs of weakness. And of course, if we close below the open of this candle, which is the start of this bullish manipulation leg, that would be a bearish change in state of delivery. And if we close below the wicks, or even test them, I guess, the wick below them, then that would be a bearish market structure shift. So, which would lead us expecting that we have a market maker sell model on the 4 hour, which would take us down to the low 50s and then possibly even lower based on if we use the projections that I showed earlier. I think it was this time I was doing this. It might have been the last time, in which case I'm sorry if I don't know what I'm talking about. Anyway, so this is really going to be a pretty consequential hour unless we kind of do nothing for the next hour and 24 minutes. But this 4 hour candle could turn out to be consequential. If we curl all the way back up and end up with a strong, long wick and a green candle, that would also be a very bullish sign. So this current 4 hour candle is going to tell us a lot. And on that note, I'm done. If you had any questions, or feel free to leave a comment. Let me know if